Volex is a company that makes electronic interconnect products. We're one of the largest players in the world, and we operate from 12 factories across the globe. We have two divisions. One is our power division, which makes products for consumer electronics. Things like plugs that connect the coffee machine or the toaster to the mains, and also the cables that go inside. Within that division, we also have an emerging business in electric vehicles, and we make the cables that allow you to charge your vehicle at home. The other part of Volex is our complex cable assemblies division. We make products there which have a price point of $10 to say $5,000. And what these products are is essentially a very, very complicated set of wiring, connectors and components that, if you like, are the arteries inside a machine. We've got a diversified customer base, we're spread around the world, and we're not exposed to any one particular segment or industry. Volex makes money by offering a quality product on time to its customers. For that, we're able to charge a reasonable margin, and we have a business which doesn't require a huge amount of capital investment. In our power business, we're attempting to make a margin of around about 8% operating margin a year. In our cable assemblies business, we believe the margins can be higher, 10 to 12%. So we've been on a turnaround journey at Volex since 2014. The current team inherited a business that was far too concentrated on a very small number of customers and was over-levered. We had too much debt on the business. And what we've done over the last few years is improve our pricing, improve our efficiency, reduce our cost structure, and increase our service to customers. And we're now in a position where we've got a business that's growing, both organically and through acquisition, and the profit margins are moving up to our target profit margins. So in the current year, the sales are going to grow north of 360 million from the 322 million last year. So very strong growth. And our operating profit this year we expect to be in excess of $20 million. We believe the growth is sustainable. We've picked partners and end markets that are growing. We're working with the largest manufacturers of data centers to develop next generation products, the leading manufacturers of electric vehicles. And in medical, we work with the most advanced manufacturers of medical equipment for next generation medical diagnostic and treatment services. Our competitors are able to produce similar products to Volex, but what they lack is the engineering resources to act as a partner to their customers. Recently, the US announced tariffs for Chinese manufactured goods delivered into the US. What we're able to do at Volex is obviously adjust our manufacturing so that we can service the US market from our factories in Mexico and our other factories in Asia outside of China. This is an important differentiator for Volex versus our China-based competition. So the acquisitions that we've made in the last year or so have been focused on the medical arena because we believe that the margins are more defensible, the customers are stable and are growing. We're able to have very good long-term visibility on the business. And that's because the products are regulated by the FDA. When you're specified onto a program, for the life of that machine, you're locked into the program. So we do have an appetite for further acquisitions. We plan to do some vertical integration in the power business, which means buying a manufacturer of electrical cable. And our intention is to do this in China and then replicate a vertically integrated power manufacturing plant in Indonesia. We also intend to continue to expand the cable assemblies business. We intend to roll up the fragmented industry in North America and Europe and make a business in cable assemblies that's about double the existing size. The long-term strategy is to make money. We want a business that is diversified and stable and generates a dividend for our shareholders, but we also want a business that's going to grow. So our long-term strategy is to harvest the power business and use the cash generated for that business to grow and expand our presence in cable assemblies. We would like the company to be twice as big on a 3 to 5 year view, and we will fund this through existing cash flow and equity issues as opportunities arise.